Hey guys, this is Greg coming in with another video. Today we're going to go a little different than my usual videos that are just talking about Fundrise, and instead I thought we talk about a little bit more about what a REIT actually is, what it does, how they're made up, and things like that, the history of them, um, just to kind of give an idea a little bit more about what's involved in the back end of something like Fundrise or a REIT that you might have in your brokerage account, just to kind of give you guys a little bit more of an idea of how it works. So if you guys like this, please make sure to hit that thumbs up button, that like button. It really does help me get some feedback from you guys. Make sure you're liking it. If by the time you're done watching this, please make sure to hit that subscribe button and the little bell to make sure that you get notifications of when a new video for me comes out. I want to try and do a little bit more of these deep dives, a little bit more on my videos, on the channel that is, and just see how it goes. So without further ado, we're just going to deep dive here on what is a REIT, otherwise known as a real estate investment trust. There we go. So a real estate investment trust, it's a company that owns, operates, or finances income-producing real estate. It acts kind of like a mutual fund in the sense that it's managed and owned by a company, and it has different things in it. It can be different kinds of real estate. It can be different mortgages, things like that. We're going to go on that in a little bit more detail in a little bit. It allows for an individual investor like you or I just to kind of earn steady dividend income without having to buy our own property. So instead of us having to buy, multiple houses and just get that income and putting down that huge amount of capital in the front, we can just kind of put in $5, $10 at a time on a brokerage and just get a monthly or a quarterly or even a yearly dividend or capital gains on that REIT that we're investing in. And you could put in $5, $10 and maybe get a couple pennies out of that, all the way up, but you're just starting slow, and you're getting that money back as you're investing, which is kind of cool. And you can just put drip on, that putting that money back into that REIT and just building it up as the years go by. So again, they're traded like stocks. They allow for some more liquidity. There are some that don't allow for as much liquidity, but we'll get that in a little bit here. And they can be pretty much any kind of real estate property type that's out there. It can be apartment buildings, it can be cell phone towers, data centers, medical facilities, offices, retail centers, warehouses, you name it. If there is real estate out there, there is probably a REIT out there that is invested in it. Shopping malls, things like that. So how does a REIT actually work? Just a little history. It was signed into law by President Eisenhower 1960 as an amendment to the cigar excise tax extension. Really long name, but it was part of that. It was just added in as an amendment. So it allowed regular investors like you and I to just have the opportunity to invest in a large-scale income-producing real estate that only the wealthy up to that point really had a chance to invest in. So it was kind of bridging that gap to allow us just to invest in something that was really out of our hands for the longest time. So they usually, like I said earlier, they usually specialize in a specific sector. So apartments, warehouses, residential, commercial, industrial, things like that, healthcare, even infrastructure. Like I said earlier, data centers, and even the warehouses like Amazon that's coming out. You can invest in that kind of stuff. So they offer a more diversified portfolio covering many markets. You can have a REIT that covers multiple things. So again, that diversification. You can have it even apartment buildings from the Northeast, the Southwest, all over the United States. Just to have a diversified portfolio all in one stock. That's kind of cool. And all of them, not all of them, but many of them are publicly traded like a stock, offers high liquidity, something that you can just trade every day, unless it's like a mutual fund form where it's just traded once a day, but very liquid, able to just trade it daily if you needed to, instead of just kind of sitting on it. Because look, if you buy a regular house or apartment or a warehouse, are you going to be buying it one day, selling it the very next day? Not really. That's more of a long-term thing. Now, a REIT, in my mind, you're investing in it long term anyway. But in this case, you kind of have a little bit more flexibility on what you're investing in. Instead of putting, hundreds of thousands of dollars down on one thing, you're able to put that kind of spread out, which is, again, really nice. So what qualifies as a REIT? I know this is a really big slide, but a company has to comply with certain things from the Internal Revenue Code to be qualified as a REIT. They have to be primarily an income-generating real estate for the long term, distribute income to their shareholders. And how do they do that? Well, they're investing at least 75% of their total assets in real estate, cash, U.S. Treasuries, and just investing in that in the long term, like I said, and just always investing something into it from people that are bringing their money into there. They have to derive at least 75% of that gross income from the rents, interest on mortgages that finance the property, or the real estate sales. So they have to pay a minimum of 90% of taxable income in the form of shareholder dividends each year. So you're getting 90% of that back as dividends every year, which is kind of nice. They have to be an entity that's taxable as a corporation, and they have to be managed by a board of directors or trustees. It can't just be a single guy out there in charge of it all. It has to be voted on, has to be together, so that way it's a little bit, again, diversified even at the board level. You're not just having one person directing it. They have to have at least 100 shareholders after the first year of existence, and no more than 50% of its shares can be held by 5 or fewer people. So you have to have a lot of people involved in it just to make sure it survives. Today, just to give you a little bit of fact with this, it's estimated that REITs are collectively own about $3 trillion in gross assets, which is a lot of money. $2 trillion of that are in publicly traded REITs that we're looking at today. So what kind of REITs are there? We're going to look at it in two folds here. The first kind is what they actually invest in. So equity REITs are own and managed income generating real estate. So that's just like if you buy apartments, you buy the warehouses, they're buying them. Okay, they're buying the actual physical real estate. And then the income is mainly through the rent from those properties. That's what you're getting back, the money from the rent. There's also something called a mortgage REIT, and those actually lend money out to real estate owners, either through mortgages or loans or from mortgage-backed securities. So the way they get their money back to shareholders is earnings through net interest margin, which I have here. It's the interest earned minus the cost of funding those loans. So that's the money you'll get back. So instead of rent, you're going to be getting it through net interest margin. The third kind of REIT in this category is called a hybrid REIT, and just like the name suggests, it's a hybrid combination of equity and mortgage REITs. Depending on what it is, it could be 50-50, it could be 60-40, 70-30, whatever. It's just going to be a hybrid, a combination of the two. So the other kind of REITs are how they're traded and how they are allowed for you as an investor to buy and sell them. So they come kind of down into three categories there. We have the publicly traded REIT. That's listed on major exchanges. They're bought and sold by you and I. They can be ETFs. They can be just regular REITs themselves, or they can be mutual funds. They're just available, and also they're regulated by the U.S. Securities and Exchange Commission, the SEC. But they're just the ones that are right out there for you to buy and sell all day long. Then you have the public non-traded REITs. They're not listed on exchanges. If you've been watching my videos, you kind of know these already. I invest through Fundrise. So if you go through them, you're giving them money and they're putting it in their own REITs that they created. That's that public non-traded part, because it is regulated through the SEC. They're a little less liquid, but they're considered more stable due to not being on that open market, not being traded all day long. If you've looked at my videos on Fundrise, I'll put money in. It'll take about a week for them to go through the whole thing, and then it'll trade on that day. But it's only traded once on at the end of the day, kind of like a mutual fund. So again, that's why it's a little bit more stable, because they're doing that purchase pretty much that day. If you want more information, make sure to look at my other videos that I have on my channel. Like I said, make sure to hit that subscribe button, because I will be going over a lot more of those kind of REITs on my channel, and I have done that before. So please make sure to go back and look at those. The third kind is a private REIT. They're not listed on exchanges. These you can kind of think of like the pre-1960 type deal, where it was sold to more institutional owners. They're not regulated by the SEC, so they are more high risk, high reward type things. So you're seeing the more wealthier, I would say, and institutional, like they say here, being able to get into that. So the regular investor like you and I are not going to be seeing these private REITs. So how do you invest in them? Like I said, they're publicly traded. You can get them through a broker: Robinhood, Webull, Fidelity, Schwab, TD Ameritrade, things like that. If you're interested in that, please make sure to check down in the comment or in my description below. I'll have some links to Webull and Webull and Robinhood, so you can kind of get started in there. If you're interested in a lot of those different ones, M1 is another one. If you're interested in some of them, please let me know, and I'll make some videos on those trading platforms so that you can kind of get an idea. I do want to try and get some REIT videos in there just to kind of see how to invest in that as well. So if you're interested in a specific one, please make sure to put the comment down below, and I will go through that with you guys. Many of them are available through retirement plans, Roth IRAs, 401ks, things like that. About 87 million U.S. investors own REITs through their retirement plan. That's about $69 billion in dividend income alone back in 2019. That's the last recorded metric on that. But that number, 87 million U.S. investors have that retirement plan, that kind of speaks to you on how good REITs can actually be. It's amazing, that kind of return. $69 billion for those 87 million U.S. investors. That's crazy. So think about that when you're setting up your accounts. There's more than 225 publicly traded REITs available to purchase. And again, they diversify so much. If you want something, just look for it. It's probably there for you. So make sure to look at how the management team is compensated for this. That's the kind of stuff you want to look for. What kind of management team they are. Do they get compensated through performance? Because if they are, you're going to be seeing them fight tooth and nail to make sure that they have the best returns for you, because they're going to be getting compensated better because of that higher return. Make sure to look at anticipated growth, current dividend yields, what kind of markets are hot currently. You can be investing in, say, healthcare right now. That's a pretty hot one. And just kind of see what the temperature of the market is at that time. Okay? So pros and cons of these. The pros: liquidity. Again, I did talk about this. Regular REITs, very liquid. Then you have the public non-traded ones that are a little bit less liquid. They're more of like the quarterly liquidity that you can get into. High diversification, depending on what REIT you get into. It can be something that covers a broad swath of the market, or it can be just apartment buildings all across the country, depending on that. Very high transparency with these things, because you're seeing what you get, and you're getting at least that 90% back for the year. Always a good thing. It's a stable cash flow from that 90%, that dividend, and it's good risk-adjusted returns, generally good. And it has high, like I said earlier, high return performance in the long term. The last 20 years, REITs have generally outperformed the S&P, the markets, for the past 20 years, like I said. So it's pretty good to put some money into this and, again, diversify that portfolio. Some cons: low growth. Again, that depends. This year, if I look at my portfolio, they did have a high growth, but over 20 years, it can sometimes have a low growth, depending on what you're getting into. Dividends are, like I said, taxed in regular income with that and capital gains and things like that. So please just make sure to talk to your accountant or your CPA or your financial planner to make sure that you're doing the best that's for you. I myself am not a financial planner, so don't take what I say with a grain of salt. But I personally do a lot of my REITs in my non-taxable accounts. They're subject to market risk. Again, I'm thinking of the housing crisis of like 07, 08. Took a really big dive. We're now back and we're good. But again, the market can really, it's just like the stock market. It can go up and down. Take that for what it is. And some do have a high management or transaction fees. Just make sure to look at that when you're doing it. If you're looking at REITs, make sure to check that price, just like you would for any kind of market item. Okay. So that's pretty much it. If you have any more questions, please put them down in the comments below. I will gladly research them and get you some answers. I just thought this would be a nice little different thing than what I usually have on my channel, doing a little bit more of a deep dive. If there's any other subjects on the market that you want me to do, I will gladly, again, research that and make a video like this just to kind of help explain for you guys a little bit more. Again, if you did like this, please make sure to hit that like button. Really does help me out. Make sure that you enjoy what you're watching and make me want to create a little bit more for you. And if you did like this, again, please hit that subscribe button so that you can see some more on this and what I'm doing here with Fundrise, real estate, stocks, and things like that. Like I said, if you want to see anything on Webull, Fundrise, Robinhood, M1, anything, Fidelity, any kind of brokerage, I can just go in, create something, and show that to you. And if you do, please make sure to support me. I do have some things in the description below about Robinhood and Webull and Fundrise. So that does help me out, and I can kind of help create some more content for you that way as well. So again, guys, take care, and we'll see you next time. Bye.